Welcome to TheoTrade. This is Don Kaufman. October 17th, 2025. 30 minutes to go to the cash close here on this Friday afternoon. The S&P's up a staggering 35 points. Look, let's just start off here on this weekend update. Well, with stating the obvious. Holy crap, was that a volatile week? I mean, 100-point ranges overnight, volatility soaring into backwardation, the VVIX, if you know what the VVIX is, into territory that it's only been into a handful of times ever. All people, while the S&Ps are what? Basically sitting at or near all-time highs. There's a lot to discuss here on this TheoTrade weekend update. With volatility, it's just ripping and the market completely ignoring it. Two-sided trade, though, is alive and well. Let's start to break it down. You know, the amount of fear in this marketplace, you can taste it, you can touch it, you can literally smell it on people. But would you be surprised if I told you the marketplace didn't just finish higher this week? It actually finished considerably higher. I mean, the S&Ps, they're higher on the week, and you're like, how is that possible? Because time out. We're actually going to start with this, okay? The VIX, if you take a look at the VIX, does this look like a week where the S&Ps are finishing dramatically higher? Okay, there is a huge catch-22 in this marketplace. So normally, okay, and for those of you that speak volatility geek, when volatility goes like this and it went like that, markets, okay, are usually tanking. Well, we have an interesting, as I said, kind of a catch-22 here. Volatility took off to the upside. And right now, okay, what are markets doing? They're relatively flat, just magnificently large ranges, though, on an intraday basis, dangerously large ranges. So I want to start with that, where the volatility soaring, okay? Forget right now, and I'm really quite serious about this. Forget about price action. You know, you want to look at like different levels in the S&Ps, and I'm sure people are like going to examine, they're like, well, 55, 75, who gives a crap? Because I'm going to tell you right now, when you got a VIX that's soaring like this and the 20 handle and, you know, the volatility futures, which I'm going to describe in just a moment, go into like a wild backwardation. Nobody gives a crap about levels. It doesn't matter. Everything gets thrown by the wayside because all of a sudden, okay, you go from that, I'm so greedy, to wetting yourself in fear. And that's where this marketplace is at. So push aside whatever you think about the S&Ps. It doesn't matter at this point, other than the fact that the S&Ps, they're just a hop, skip, and a jump off the all-time high. I mean, the all-time high, and this is the S&P futures, is 68, okay, 6,800. We're trading what? You know, 78.10. You're exactly 100 points off, which ironically, it's not even a 2%, you know, decline in markets. So again, push price action aside for just a moment. Let's start to examine a little bit more about volatility. And on the front of volatility, okay, yes, okay, the VIX spiked in overnight trade, hit 29. Holy crap. It is definitely calmed down to some degree. So it's all the way back to 21. But 21, okay, even 21 is definitely in your radar screen for this year. But okay, where's 21, for instance, for like the last 3 years? And again, I'm just going to, you know, draw a line across the screen over here just to get a quick feel, okay, of kind of where volatility is right now. And to that effect, okay, there's a few times that we've gotten here, but only a few times. And this is in the last 3 years. So it's very easy to say this is one of the most serious situations that we've been in, okay, since a bear market of 2022. Now, obviously, okay, we had some rip in volatility in April, and people are going to talk about, oh, it was tariff talk, and this might be tariff talk. Maybe it's more, okay? Here's the bottom line when it comes to volatility. It sees something. What is that something? It's a great question. Stop thinking about it. Who cares? Okay, it's going to be tariffs and it's going to be this. Block out all the noise. None of that crap actually matters either. It doesn't matter what the condition is. Okay, you have to get to the bottom line, kind of, you know, the context of the marketplace. And with that, you look at volatility futures, and what the volatility futures are telling you right now, okay, is that risk is still absolutely unequivocally imminent. I want to say that again. Risk is imminent. Okay, we are in imminent danger. That is exactly what it's saying. If you look at the 33-day volatility futures, okay, you go out 61-day volatility futures, they're basically even. And what that implies is that risk right now, okay, in the next 30 days, okay, is the same as risk in the next 60 days. And you're like, well, how can that be? Because given more time, you should theoretically, okay, have a lot more risk to the marketplace, right? So if you have 60 days, you're like, a lot can happen in 60 days. But in the next 30 days, maybe not as much can happen, except this marketplace has gone into what we term, it's backwards. That's why they call it backwardation. It's all backwards, where the world right now is more risky in the next 33 days than it is in 61 days. It's basically, it implies that the world is kind of blowing up around us. And then you have to, if you're an experienced trader, you have to say, time out, okay? I've been looking at this graph since these volatility futures came out all the way back in 2004. Okay, I've seen all kinds of backwardations. I've seen the biggest backwardation, okay, in modern history. Obviously, in the financial crisis, saw another massive backwardation. You know, in 2020, entering into COVID, huge backwardation. Even this last April, you know, during like the big tariff scare, obviously in April. But I ain't ever seen a backwardation, okay, like this that we saw earlier today and yesterday. I've never seen a backwardation when you're basically sitting at all-time highs in the marketplace. It doesn't even make sense. And I'm telling you right now, okay, to summarize the backwardation in markets, just summarize where volatility is right now. This marketplace feels a risk, okay, that just hasn't, like the situation hasn't come to a head yet. And it might be that there's financial plumbing issues out there. Okay, if you haven't looked at the financials, these things have been all over the place. Okay, you know, if you haven't looked at like KRE, we're going to look at that in just a moment. Holy crap, regional banks, yada yada. Maybe it's that, maybe it's tariffs. Okay, as I said to you a moment ago, stop wasting brain power on that and start reading. Okay, the market is telling you that risk is imminent. Does that mean we're going to tank? No, but it sure as hell doesn't help. Okay, it's huge amounts of risk. Okay, right now for a marketplace at or near all-time high. And the two of those, they don't really coincide with each other. They just don't, okay? The next thing I want to point out is the VVIX, the volatility, okay? The volatility VIX. It's come down today. It has contracted, okay? But it's still in really, really high territory. If you look at the VVIX, this is the volatility of the VIX. It basically, okay, the way to think of the VVIX is, okay, it's kind of like who's hedging, and how many hedges are really needed. And a lot of big trade, they go to the VIX to hedge in the midst of like, you know, a lot of risk. The VVIX right now is trading in still the 120 level. I mean, it was almost to 140 earlier today, but I just want to bring up this 120 level. Again, this is a 5-year. This is serious territory because once again, okay, the VVIX in this territory, yeah, it happens. Okay, and it does happen, but it doesn't happen when your markets are sitting at all-time highs. Once again, okay, we're stuck with this feeling like, what in the hell does this marketplace know, okay, that hasn't come to fruition yet? That's the way that I interpret it. And again, I'm not sitting here trying to think of, okay, what's China going to do over the weekend? I don't think I care, okay, because I'm going to tell you right now, it's the catalyst that you don't see that's coming. That's the one that's going to move markets. Don't waste brain power. Don't waste your brain GPU on trying to figure out crap that's not going to matter, because it doesn't matter what the catalyst is. Okay, the market sees catalyst out there, and that is that's the name of the game. So backwardation with markets near all-time highs, the VVIX, okay, also portraying an extraordinarily high risk kind of environment. Clearly, the VIX is kind of contracted over here, but still left in some utterly just wild territory, right? Next in the docket, let's talk about KRE. Let's talk a little bit about the regional banks and what I'm actually calling kind of the crap fest that's going on. So it seems like out of left field, okay, we heard about Jeffries Bank, okay, and it comes out of left field because there's this auto parts company, First Brands, okay, they go belly up, nobody sees it coming. Jeffries is actually left holding the bag. It's a couple of $1 billion of risk. They could absorb easily a few $1 billion of risk, but then one of Jeffries' largest clientele said that they were going to pull all their capital out of the firm. and cause a run on the bank. Now you're seeing some sell side activity over here. All of a sudden it becomes contagious. Zion's all of a sudden, okay, states that they've actually taken some losses because of fraud. And from there, it's Mr. Toad's wild ride. So then you had Wall, as I recall, Western Alliance. They took a little bit of a hit, and it went from there. KRE got absolutely rocked. But hold on. Take up auto expected moves, and here's the craziest part of it. In terms of auto expected moves, and this is a great way to kind of distinguish how wild the risk is, okay? The KRE, which is a regional bank ETF, broke down last week, rallied back, okay, sold off, but is still inside the expected move. So with all of that risk kind of on the table, okay, for now, what's contagious is, well, contained. Just keep that in mind. What's contagious is contained. We'll watch this early into next week. I would actually anticipate, from my point of view, okay, maybe a little bit of a bid back overreaction, then some more sell side activity if markets start to get wild again. Markets get wild again. There's just no question that KRE is going to take a more dramatic hit. All right, so I want to move past that because, again, regional banks, they turned into an utter crap fest. But I'll reiterate again, if you take a look again at their expected moves, and I love to look at this stuff, even Jeffries, who got the crap kicked out of him last week, ended this week, and this is important, they're going to end this week higher. That thing is going to end this week higher, which is absolutely shocking. That's why when I look at like the VVIX and I look at backwardation, okay, so in my estimation, it's not regional banks we're worried about, because if it was regional banks we're worried about, they would have just kept right on hitting these things. Moving on over here. This is where I'm going to tell you, keep your eye on the prize, okay? AI stocks, unscathed. Just absolutely unscathed. This one, it's more bothersome than anything. Take a look. I mean, Apple is not AI. I got it. I know that I'm going to get like 5 emails like, sir, Apple is not AI. They can't. I know they can't produce their way out of a thinner iPhone. Interestingly enough, Apple's going to end the week not just higher. It's actually going to finish the week at the upper edge of the expected move. Microsoft massively unchanged in the week. Amazon mildly lower on the week. Okay. Google, where are we at? Cracks the upside of the expected move. Huge move to the upside throughout the course of the week. And here's the crazy thing, okay? You realize that Google is about to have its all-time closing high. All-time closing high in the midst of the crap that we've seen over here. That's why I said, eye on the prize over here, okay? Next on the docket, Meta, massively unchanged pretty much in the week. Very, very mild bid. Nvidia, unchanged in the week. Tesla, okay? Tesla, kind of a wild week, but still dramatically higher on the week, upper edge of the expected move. Broadcom, okay, after having a smashing week to the upside, pulls back ever so mildly, but still to the upper edge of the expected move. Now, time out. When I say eye on the prize, I mean it. Okay, we're so focused on like, holy crap, the volatility is coming up. Okay, it's crazy. But the AI trade, the unwind, it's not having any impact whatsoever at this point. And now I'm even more concerned because markets are moving around, okay, massively throughout the course of this week. I mean, they really moved. You take a look at stuff like Nvidia, though, this doesn't look like, it just looks like any other week. And Nvidia obviously is at the central point of this trade, but Nvidia looks like any other week. Like you wouldn't know, other than maybe last Friday, you wouldn't know that this is a wild and woolly week. Okay, if you took a look at Broadcom, you would think like, damn, this was a great week to buy this, stock, and they bought the dip down here. Okay, if you look at Google, you're like all-time high. Nothing has changed in these products, which brings me to the thought that something is about to change in these products. Why? Okay, because I'm starting to read into some of their volatilities, and you start looking at things like Nvidia. Right, this is where a lot of people, they don't spend enough time looking. Okay, they spend enough time here in the charts. You go, what can you see here? You don't see a damn thing. What do you see over here? Holy crap, the volatility in Nvidia is up. Okay, big boy. Why am I looking at Nvidia? Because I know it does not have earnings. So I know some of the other products have earnings. I know when their earnings are coming out. I can see it clear as day. Okay, volatility in Meta is already spiking, 31, out to the 31st because it's got earnings, and Google's going to have earnings, and Microsoft and Amazon. But Yeah, Nvidia, okay, not so much. There's no earnings coming out in there, and the volatility is actually it's up there. Okay, in fact, I started looking at a couple of different studies in this particular front. Okay, and that volatility is picking up right now. This is what we actually call the implied vol range, right? So this is an implied volatility ranking, and the implied volatility right now in Nvidia, okay, is actually well beyond where it was in the previous earnings period for Nvidia. So it's coming up. It's not the highest it's been. Okay, so again, here's earnings, here's volatility. Here's earnings, here's volatility down here. Here's earnings, here's volatility. Right now, it almost looks like Nvidia has earnings. So its volatility is definitely elevated. Look, okay, for some of that risk, I think, to actually proliferate early next week into some of the AI trade. The other reason I think we're going to see that is crypto. Okay, let's get right down to business. Let's actually bring it up. Okay, I talked about this extensively on Wednesday night's video. I said crypto is going to crack 110. And when it does crack 110, crap's going to get wild. Here we are, okay, 106 and change. Crap's getting wild in this world. What's really weird, though, about Bitcoin, let's not just talk about crypto and generalize. Let's talk about Bitcoin. What's really weird is that there's individual products like Riot, okay, and this thing is, obviously, okay, crypto, Bitcoin, it's not selling off right now. And that to me bothers me. Then I look at stuff like Hood. Okay, why am I looking at Hood? Because Robinhood, some of the same people that are trading Bitcoin are trading, stuff like Robinhood. It is seeing some sell side activity. Okay, year-to-date basis though, its pullback is negligible versus crypto, specifically versus Bitcoin. And when I started digging deeper into this, I was actually pretty shocked as well. Look, from high to low recently, and I'm just going to kind of zoom in for a second because I want to give you guys a quick feel for this. But from high to low, okay, if I went to absolute high, okay, absolute high, we got that right to where we presently are. It's about an 18% decline. 18%. You're almost in full-fledged bear market territory inside, okay, of Bitcoin specifically. Keep an eye on this. I think there's some contagion coming. All right, let's actually cruise over to gold. Why? Okay. Oh, come on. It's been the talk of the town. I'm just going to make this very simple. The last couple of weeks I've been saying somebody knows something. Gold is ripping. Okay. I still agree with that. I mean, the markets are seeing risk. Just like volatility is flying, gold is flying. But I'm going to tell you something else about gold that a lot of people don't see, specifically GLD. Okay. I looked at /GC. Now, this is the futures contract. The futures contract, okay, look, it's got all the signs of overblown. It's got big boy volume in here. Okay, I got it. When you look down at option statistics though, okay, the amount of options trading in here, 38,000 contracts. Oh, that's pretty big. That's nothing. Take a look though at GLD. Why? Okay, GLD, this is absolutely wild. Okay, GLD, and I do trade this product and often. Okay. It is trading right now, okay, 2 million option contracts today. This isn't like the spiders. I mean, this is a product that, a few weeks ago was probably doing like 40,000 contracts on a big day. 40,000 contracts a couple of weeks ago. Now it's 2 million contracts. And that is, okay, double the size of norm. What's even more disconcerting, it's actually trading a lot of puts today. The number of puts trading in there is over, 3 times the norm. What I do believe we have inside of gold, it's gamma squeeze, okay? Gold and a lot of what perpetuated this up move, okay, is actually options activity. What perpetuated a significant amount of the move inside of GLD, okay, is the options activity in here and what we often term a gamma squeeze. And now we're seeing the unwind of it. We're seeing people are buying puts. And by buying puts, okay, the market making firms are forced to actually, to sell shares of GLD. So it's getting even more wild in this marketplace. So gold is not like, again, people are going to look at the technicals and it broke out, it did this. Who the hell cares? It's gamma squeeze. It's gamma squeeze. And I'm saying that without unequivocation. Okay. The opinion over here is just simply that, yes, it's flipped over and yes, they're buying puts. Okay. But there's no question that we're actually squeezing because of gamma at this point. All right. Trades that I did this week. XSP. Okay. What have I got in XSP? Okay. Well, I actually took out some really nice positions this week. One of them for 263% return. That was actually a 0 DTE. And I'm bringing up XSP because it's a mini version of the SPX. Okay, looks like the SPX, feels like the SPX. Okay, trades just like the spiders, but it's a cash settled instrument. Then on Broadcom, so the XSP trade, by the way, was 0 DTE. On Broadcom, this is an in-out spread, took out a 30% gain. Okay, on Schwab, this was actually an earnings-based trade. This is actually, okay, what we call a flip. It's an earnings butterfly, 111% gain. On UAL, okay, who makes money in United Airlines? Apparently I do, with 107% return there, again, on an earnings-based butterfly. Much more of that to come next week as well. All right, let's get down to it here. Let's cruise back to the SPX, because the SPX, as I said, like, you know, if you showed me the volatility this week and you just showed me the volatility, I'd be like, damn, that marketplace must have gotten killed. Okay. Well, you know, the irony is the SPX started the week, okay, at 65.50. That's where we started the week. Right now, okay, where are we? Just over 100 points higher. I mean, it's decent. It's a large move, but this week actually had $197 expected move. So look, we were anticipating some big boy volatility. What we didn't anticipate, though, is that volatility kept creeping up on the week as markets, okay, had recovered. It's just wild stuff going on. More importantly, though, what's going on next week? Okay, we're coming off $197 expected move. What are we going into next week? Well, keep your big boy pants on because we're still there. All right. Next week, we're still looking at about $143 expected move. Okay. Now, for those of you that haven't been necessarily tuning into expected moves week in and week out, okay, there's a lot of weeks recently. They had like $85, $87 expected moves. Okay. That's kind of been the norm, maybe a $92 expected move around the Fed announcement. All of a sudden, we smash into volatility land. We skyrocket to $197 expected move. But even next week, okay, $143 anticipation of movement is still big. Okay, there's no question. And you know, I don't mind saying this. There's 4 minutes to go to the cash open. Okay, I'm not dumbfounded, but I'm definitely surprised that the markets are finishing today up where they are. I'm not surprised that they're higher, okay? But I'm really surprised, though, that there hasn't been some late day selling. And you're like, well, why? Because I, for one, I don't really want to go home long. Do you? Okay? You've seen what volatility is capable of this week. I don't care that the VIX is down 4, it's down 16%. It's all going to be okay. Maybe, okay? Maybe, but we're still at or near backwardation in volatility, which it doesn't exactly leave me warm and fuzzy. Like I'm not going home this weekend long anything. Not warm and fuzzy over here. Look, bottom line, as I said, the volatility, it soars, but the market turns around, just completely ignores it. Thanks everybody for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.